Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Happy American Thanksgiving.
Yeah, I had my turkey before, but I do like turkey, so maybe again tonight.
Yeah, well, Canadians invented Thanksgiving 60 years before the first American one, and we do it a month earlier so we don't drain our thrill for Christmas. More Americans travel for Thanksgiving than they do for Christmas because they don't have a Boxing Day. Yeah. So they don't get a long weekend out of Christmas like they do out of Thanksgiving.
Yeah. Well, right now, you're looking at a half-day market tomorrow. They're off today. So a little bit of a break.
So the price of oil in the low 70s, was this predicted, and what's causing it?
Well, there's two issues that are going on. One is demand is weakening, and we've seen weakening demand in China because of all the problems going there with the real estate sector, manufacturing, exports. And in the U.S. yesterday, the EIA reported a build in inventory of 8.7 million barrels to 448. And it's now, storage in the U.S. is now up 16.4 million barrels from a year ago at 431. So you've got an increase there. The other thing is U.S. demand is weakening. You had motor gasoline down 469,000 to 8.48, and you had jet fuel down, and domestic production is up. So when you take U.S. domestic oil production and renewables and natural gas liquids, they're producing about 21 million, but they're only consuming 20. So the U.S. is very self-sufficient. But when you compare consumption year to date, they're 20.192 million, down from 20.314. So the Americans and the Chinese are declining in consumption, which is part of it. The other part is OPEC tells a good story, but it's the old story with military. Trust but verify. Well, they say they've cut 1.2 million barrels from OPEC, and then Saudi, on top of that, cut 1 million barrels from July 1st. So they're now talking, and part of the rhetoric for pushing prices up in the last few days was that they might extend the cuts into the end of Q1, which the Saudis is leading to tighten up supply and demand. But if you look at the data from June of 2023, the production then was 28.2 million. In October of 2023 was 27.9. So the total decrease was only 289,000 barrels, not the 2.2 million. And the reason is you're seeing is that while the Saudis did cut by 1 million, the other countries like Iran, Angola, Nigeria, Libya increased their production, and many of them have very large populations, so they need to increase their revenues to provide food and shelter the military, the graft, the whole bit, and so they're not very keen to cut back, and so the Saudis are upset, and they want the African nations to agree to tougher measures. And they're almost threatening, saying, and the reason we saw the rebound in the afternoon yesterday on the price of crude was they were saying, look, we're producing 9 million barrels a day. We could go to 10, 11, or 12 very quickly. If you guys don't agree to production cuts, we're going to increase production. and their retaliation is, you've got 9 million barrels a day, you've got a lot of money coming in the door, you got more money than you need to handle, the requirements of your society. We don't have enough money coming in the door, so we're going to continue to increase production. So between now and next Thursday, when the OPEC meeting happens, we're going to probably hear a lot of noise. I think it's quite possible that the bottom is going to be between 70 and 73 WTI. I think you remember last time we talked, I said I thought we were going down from the mid-80s to 74 to 76. With all these problems and the U.S. inventory builds, I think the number goes lower now, and 70 to 73 I think is where we'll be in the next few weeks, and that should give us the next great buying opportunity since March of 2023, when you remember we got almost excitingly bullish, and we added 7 names to our action buy list on March 13th and another 7 on March 15th.
Now, the conflict in Gaza, has that had much of an impact on prices?
Well, originally people thought that if the Iranian proxies, got more involved, like Hezbollah in Lebanon, which would be a 2-front war, or Yemen, which could be a 3-front war, that hasn't happened. The Iranians have been warned by the United States and other Middle East entities that you don't want that to happen because the Americans will come after you in Iran. And so I think it's stabilized, localized with Gaza. Everybody's optimistic about the tomorrow, the first of the hostage exchanges, 3-1. So women and children are being released, up to 50 by Hamas, and 150 will be released by Israel. How they do that, is it through Qatar? Is it through the Rafah Gate with Egypt? There's going to be, a number of issues here, and we'll be waiting to see, does it happen? And if it does, that will again lower the temperature.
We'll have more with Josef Schachter right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Joseph, what's going on with the Canadian oil market, staffing and so on?
Well, the rig counts are down, and the amount of fracking is down because the number of new wells to frack is coming down. So there's been a bit of softness. There was quite a while of tightness in the labor market for the oil patch, but that's now a bit under more control. And a lot of these projects, the big ones, TMX and Coastal, are nearing the end of their construction cycles, so that's going to put more labor availability out there. And the question, employees have to look at is, do you want the higher pay working in the field and then coming home every 2 weeks or 3, or do you want a job in the city where you come home every night and you might get paid less? So those kinds of issues are normal for the patch, and the patch usually has to pay way more, and especially young people then will take it up because they get a career path and they get paid very well.
Is Alberta going into a big wind project, a big wind farm?
Well, they've been talking about a lot of the renewables, but the premier's put a hold on it for a while because they're in doing arm wrestling with Ottawa over carbon credits and the whole carbon initiative and carbon support by Ottawa. And until that is resolved, I think you saw part of it is also that Atlantic Canada offer of them not being charged carbon taxes for their home heating, and you've seen Saskatchewan, the premier, say that he's going to put all of the natural gas heating under the Minister of Energy, and then they're not going to charge the carbon tax for the feds and let the feds take them to the Supreme Court.
Or Saskatchewan could do like BC. We have a carbon tax, and the carbon tax is 0.0000001%.
Yeah.
So you can say you have a tax. Do you see any other fallout here from it's okay if you use fuel oil to heat your home, and don't have to pay carbon tax. But if you use natural gas, which is less harmful to the environment, you do pay a carbon tax.
Yeah, I think all of these things are just, the battles that are going on between Ottawa, between the Liberals, Poilievre's PCs, between the provinces. The budget, of course, is coming, and how much taxes are going to go up. They've admitted that the only goal they've got is keeping the debt within 1% of GDP in terms of deficit. But this whole issue is going to be the political battle of the election. And if Poilievre wins, then it gets thrown out, and the provinces, are then going to have to look at how do they move forward on carbon capture and what incentives feds in the province give to move it forward. Because the companies are saying, look, part of it is technology, part of it is incentives, and why should we spend money until we know what the rules of the game are?
Taking a look at another venue here, stocks and bonds and those markets, what's driving the positivity on the stock market right now?
Well, if you look at some of the data that's coming out of the States, the S&P 500, 7 stocks, which are now called the Magnificent Seven. If you remember, there used to be the FANGs and then the .com names. Those 7 stocks are over 90% of the capital gain year to date in the S&P 500 and more so in the NASDAQ. And those stocks are trading at ridiculously inflated valuations. And the market, the majority of stocks in the S&P 500 are down for the year. So we've got a very narrow market, and I think that, could they hold it up through, Christmas with a little Christmas bounce? But I think sometime in Q1 we're going to pay the piper, and I think there is a significant decline. I think the Dow goes below 30,000, the S&P below 3,000, and that's going to cause angst out there. And I think if energy pulls back some more, that will be what gives me the next great buying opportunity, which I think is within reach of the next few weeks or months.
The U.S. government saw its credit rating downgraded. Was that deserved?
Yeah, Moody's is worried about the deficits. They're worried about the amount of new debt that's being brought on every year. $2.5 trillion of new debt was added last year to replace maturing debt, plus the $1.7 trillion deficit. So it's pretty ugly numbers. And with interest rates having gone up, the interest costs now are about $1 billion. And if you look at the amount of revenue that comes in, it's like $4.5 trillion. And then you add the deficit in it, and you realize the numbers just don't work anymore. But it's the attitude in Ottawa and the attitude in Washington, the attitude in London and all the major centers is pass the bill on to future generations, and none of them have the willpower to go and say, look, we have to raise some taxes, we have to cut loopholes, and we have to cut some spending, and politicians don't like doing that.
How's Canada's credit rating? Is it in danger of being downgraded?
I don't think so. I think we're looking at that it's still, because of that 1% of GDP, other countries are 2 or 3% deficits to GDP. So it may not be as crucial. Also, our economy was doing well. Tax revenue had picked up. Remember, you're also got, the GST revenue is picking up as the economy and spending picks up. So I, if it's 35 billion deficits for the next few years, they become smaller as a percentage of the GDP, and that's better than other OECD countries. So, the Liberals can stay in power and give out a lot of goodies at election time like they always seem to do. And then again, the battleground becomes the 416-905 area code, which is the Toronto area.
Now, I wonder, because Canada naturally captures so much carbon because of its large boreal forest, shouldn't Canadians actually be getting a carbon credit instead of a carbon tax?
Well, it's also, what is included in the whole carbon area. Do we include our steel mills? Are we including the hydro of Quebec? There's a lot of damage done there. that doesn't get included. And so, just going after fossil fuels, to me, is only part of the issue. And you got to look at who the big polluters are. And Alberta's closed down our coal industry, so there's no coal-fired electricity in the province. And, so if they say you can't use natural gas, then, you can't just go to nuclear quickly. You can't go to hydro quickly. So it's a penalizing for Saskatchewan, Alberta, and that's going to be a big issue. And that's why, you're beginning to hear more and more of antagonism, where people are saying that, if they ram this down our throats, maybe we should have a referendum about being part of Canada.
Is BC over-reliant on hydro? If we're having diminished rainfall and snowpacks every year, where is this water going to come from for our hydro dams?
Yeah, and also the government is promising that all these LNG plants going forward are going to be attached to the electric grid at some point. Well, if you can't add more electricity from hydro or wind or solar, then these are empty promises.
Anything else we should be keeping a close eye on right now?
Yeah, one other thing that I'm watching outside, is this situation in the States where yes, you've passed the the CR to January, February, but you're in an election year, and if they can't find ways to move forward with the budget process, and then we get into the campaign season. I think the U.S. May face some very difficult times here because they still haven't come up with that $100 billion budget or a proposal to give $60 billion to Ukraine, $14 billion to Israel, money for the border, and so a lot of that is going to be part of the political nightmare of 2024. And any of that goes bad or goes wrong or doesn't happen, I think people are going to be very concerned. And, of course, markets don't like uncertainty. So, again, that adds to my view about, the AI, the Magnificent Seven, that we could be looking for some tougher markets because the markets are priced for perfection right now. And any damage to that, going from greed to fear, can mean a significant erosion in prices for stocks. So investors should be making sure they have some liquidity, maybe build cash reserves depending upon what your investment advisor feels comfortable, 10%, 20%. I think a defensive approach is probably important to have because the general market is the one that has the most downside. Energy, not so much, but definitely the general stock market. And the AI stocks particularly are vulnerable.
Joseph, thank you so much for chatting with us.
My pleasure as always.
My guest has been Josef Schachter, founder of the Schachter Energy Report online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or for any of our guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on X at How Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.